So, no mai haere mai, welcome to our webinar. Tēnā koutou katoa, ko Amelia Sharman Takawangawa, and it is my pleasure to welcome you today to our webinar on mandatory climate reporting in Australia. So, as those of you who have been following developments closely in Australia will know, it is a very busy time for our cousins across the Tasman, and very similar to the work that we did here in Aotearoa in 2021. So both the legislation to advance mandatory climate disclosures is moving forward, as is the work to establish the reporting standards. So we're really fortunate to be able to welcome here today our guests, Justin Williams and Dr. Lachlan McDonald-Kerr. Justin is the Managing Director of the Australian Accounting Standards Board and the Australian Auditing and Assurance Standards Board, and has previously served as the CEO for not-for-profit organisations in both Australia and the UK. He has a wealth of experience within the professional services and government sector, having previously worked for Deloitte Private as a consulting director, and has also considerable board experience. So welcome, Justin. And Lachlan is a senior manager in the sustainability reporting team at the Australian Accounting Standards Board. He primarily works on technical sustainability reporting and standard setting matters, and also manages international and domestic stakeholder relationships and supports the AASB sustainability research projects. Lachlan has a PhD in accounting from La Trobe University and is a Cairns Chartered Accountant and a CPA Australia certified practicing accountant. So welcome, Lachlan. So before we begin, just a little bit of housekeeping matters. So first, this webinar is being recorded, and the recording and these slides will be available on the XRB's events page. And we ask you to please use the Q&A function, so not the chat function, the Q&A function, to ask your questions. I will be keeping an eye on the questions, and we plan to leave a decent amount of time at the end of the webinar for questions. And please click the thumbs up icon in the Q&A function to upvote questions that you would especially like to see answered. And if we run out of time, we'll have a record of any questions that don't get answered, and we will endeavour to somehow get back to participants with any popular unanswered questions. So it is my pleasure now to pass over to you, Justin and Lachlan.
Brilliant. Thank you so much for the extremely kind introduction, Amelia. And hi, everyone. Thank you very much for coming along to the session. A big particular thank you to the XRB for organising this session. We're extremely proud of our close relationship between the AASB and the XRB, and particularly grateful for the warm welcome that they've extended to us here today. We're excited to be talking about the proposed climate-related financial disclosure requirements. But before we proceed into the substantive part of the presentation, it's necessary for us to say that this presentation represents our personal views on subject matter and does not necessarily represent the views of the AASB or other AASB staff. So jumping to the next slide, we thought it might be appropriate to just give you a little bit of a brief outline of what the structure of today's presentation would be, to provide a roadmap for what we'll cover before we delve into the kind of main content. So we'll broadly focus on 4 areas. So first, we'll provide some background to the climate-related financial disclosures project. After that, we'll provide some of the key details on the proposal, as well as some of the baseline amendments and some of the matters that are important to stakeholders, but sit beyond the responsibilities or the scope of responsibilities of the AASB. We'll then provide an overview of some of the AASB's outreach on our most recent exposure draft. So EDSR1 is our document that contains climate-related financial disclosure requirements, and then the next steps to progress the project as well. Brilliant. Next slide, please, Amelia. So the historic roots of the current proposal for climate-related financial disclosures in Australia can roughly be traced to the AASB's invitation to comment, or ITC for short, 46, that was issued in September of 2021. We issue ITCs every 5 years as part of our due process to conduct domestic agenda consultation and identify issues and matters that need resolution or priority. As part of this outreach, we ask stakeholders where should the AASB focus its efforts and resources for the 2022 to 2026 period, and how or should the AASB commence work on considering an approach to sustainability reporting. Stakeholder feedback throughout that process provided very strong support for the AASB expanding the scope of its activities to address sustainability reporting. And sustainability reporting should be considered a high priority, but climate should be prioritised from those. So upon hearing that feedback, jump to our second dot point on there, seems to have just been a little bit mashed up at the moment. In February 2022, we formally added the Sustainability Reporting Project to our work plan and designated it as a high priority. Fast forward to April 2022, and on the back of the ISSB releasing draft IFRS S1 and draft IFRS S2, we released these documents for domestic consideration. And we asked, firstly, are the ISSB proposals fit for purpose in Australia? And secondly, how may the ISSB proposals be implemented within the Australian context? And we heard generally that the ISSB content was a good starting point, but modifications were necessary to ensure interoperability with domestic legislation, best practice, etc. Fast forward again to November 2022, and the Australian government formally announced its commitment to introducing internationally aligned mandatory climate-related financial reporting requirements for certain entities. And as part of this, the government decided that they would amend the ASIC Act to empower the AASB to deliver Australian sustainability reporting standards to meet the government's commitment, and that climate-related financial disclosures should align as far as possible with IFRS S2, which was issued by the ISSB. So throughout 2023, the AASB redeliberated various aspects of the climate-related financial disclosure project, something that intensified obviously after the issuing of IFRS S1 and S2 in June of 2023. And this work culminated in the release of ED-SR1. And ED-SR1 really incorporates stakeholder feedback from ED-321 and responds to other jurisdictional specific matters. As part of ED-SR1, sorry, too many acronyms, we asked stakeholders whether the proposed modifications to the baseline were appropriate for the Australian context, and are the proposed modifications consistent with Australian government policy and domestic legislation. Our comment period for ED-SR1 closed on the 1st of March 2024, so we're still working through the feedback that we've received, but I'll speak about this a little bit later on in the presentation. I think one important point to reflect on when you look at this kind of the transition and the historical roots is that this process has been informed and driven by stakeholder feedback. And so beyond the kind of practical implications, I think you can see that the process of stakeholder engagement in here has been one of the kind of fundamental tenets, but it's also been the way that the AASB tries its best to operate and one of the values that we seek to incorporate in what we do. So next slide, please, Amelia. That historical context takes us to the substantive content of ED-SR1. And so if you start on the top left-hand side of the slide, the AASB developed ED-SR1 using IFRS S1 and S2 as a baseline, but with modifications for the Australian specific content. If you haven't seen ED-SR1 yet, you're welcome to scan the QR code on your screen, and the slides will be distributed. It's just much nicer than putting in the horribly long URL. The ED-SR1 is presented as a single document, but contains 3 separate standards: draft ASRS 1, draft ASRS 2, and draft ASRS 101. So the first of these is our equivalent to IFRS S1, but with a scope limitation to only apply to climate-related financial information. The second of these, ASRS 2, is the equivalent to IFRS S2 and includes a range of modifications to account for the domestic context. And ASRS 101 is a service standard that's used to update periodically references to non-legislative documents that are published in Australia, as well as foreign documents that are referenced in IFRS standards, as well as ASRS standards. While the AASB led the process, it's important to note that we didn't do this in isolation, and we benefited from the expertise and insights of other government agencies. This is really important for 2 reasons. Firstly, we don't exist in isolation and must consider how we align, or indeed don't align, with other segments of government. And secondly, it allowed us to leverage where appropriate and draw on the expertise of other government agencies. So some of the government agencies that were involved in the feedback process, if you will, were the CSIRO, who are the chief scientific body in Australia, DQ, who are the leading government department at a Commonwealth level, the Clean Energy Regulator as well, who oversees the National Greenhouse Energy reporting requirements, as well as Commonwealth Treasury. And so hopefully between the last slide and this slide, you can see that the process has not only been kind of infused with stakeholder insights, feedback, but we've also benefited from the expertise of other Australian government agencies, whilst the project itself has been led by the AASB. Brilliant. Next slide, please, Amelia. So your current slide lists some of the proposed amendments presented in EDSR1. These are some of the amendments, but not all of the amendments. And I'll briefly touch on these, although, in the interest of time, I'll try and do them at a very, very high level. So the first proposed change relates to sector neutrality, or attempts to introduce sector neutrality into ASRS standards. We received strong stakeholder feedback for a desire for sector neutral sustainability reporting or sustainability related financial reporting requirements. And we recognized that there was the possibility that these entities may be captured by mandatory reporting, or at the least may have a desire to engage in reporting by virtue of being part of another entity's value chain. And so we've sought to create the standards in a sector neutral fashion wherever possible, but of course that's something we're seeking stakeholder feedback on, sought stakeholder feedback on. The second was removing references to the conceptual frameworks. So the ISSB and the AASB received concerns about including and making enforceable aspects of the conceptual frameworks for financial reporting when they are non-mandatory and therefore not enforceable within the context of Australian accounting standards. We've sought to remove those and replace them with cross-references to existing conceptual frameworks. The third requirement relates to the removal of industry-based metrics. Put simply, the AASB made the decision to remove the requirement to consider and produce industry-based metrics, predominantly by reference to SASB standards, until such time that that content has been sufficiently internationalised. The internationalisation for process for SASB has been occurring at an international level by the IFRS Foundation. However, that process only concluded in December of last year, and in October was when we issued the exposure draft. And so without seeing the substantive content of the SASB standards, it was obviously quite challenging to say that we would consider them appropriate for inclusion, or at least reference to within ASRS standards. The fourth point relates to the inclusion of the requirement to disclose when an entity faces no material climate-related risks and opportunities. This particular requirement sought to address the potential that an organisation either had not considered climate-related risks or opportunities, or indeed the fact that they deemed it to be immaterial. And so we received substantial feedback that that would be useful information for investors. And so organisations that assess they've got no material climate-related risks and opportunities can make such a determination, but they need to disclose that fact as well as how they reach that conclusion. The fifth modification identified on your current slide relates to climate resilience assessment against at least two future scenarios. The IFRS standards do not require a minimum or a maximum number of scenarios, essentially dependent on the entity's circumstances. We've sought to balance a principal basis versus consistency by requiring at least two scenarios, one of which must be most consistent with the most ambitious goal outlined in the Climate Change Act, which is 1.5 degrees. We don't specify an upper limit, but of course that's something that we're seeking feedback on. The sixth is the prioritisation of NGA scheme legislation. So we know that, put simply, Australia has since 2007 had domestic GHG measurement methodologies in place that are referred to under the acronym of NGA. There are approximately 1,000 entities that I believe report under NGA right now, and we receive significant feedback that organisations should prioritise reporting under NGA because it was seen to be much more sophisticated and rigorous compared to the alternative. NGA at present accounts for approximately 70% of Australia's GHG emissions, and so EDSR1 proposes the prioritisation of NGA scheme legislation where practicable. The seventh modification identified on the slide relates to the requirement to provide Scope 2 market-based GHG emissions and associated relief. So Obviously, this would be in addition to your location-based Scope 2 emissions. And part of the reason why we've included that is because there was substantial stakeholder feedback that indicated that market-based Scope 2 emissions were relevant to investors alongside location-based. The government has recently come out in a policy position statement, which was issued early in January, indicating that such disclosures should be made when required by NGA scheme legislation. NGA scheme legislation does not currently require that. And so we base these proposals on details provided before the most recent iteration. And so that's a decision that we'll need to redeliberate with the board as well, in addition, of course, to the stakeholder feedback. The lucky last modification identified on this slide relates to the proposal to have a 1-year lag in the reporting of Scope 3 GHG emissions. This decision arose from the fact that we received a lot of feedback indicating that it was not practical for organisations to compile and obtain assurance over their Scope 3 GHG emissions at the same time as their financial statements. And so that, put simply, it's because they exist within the value chain rather than entities which the accounting organisation controls or the accounting entity controls. And so we've proposed a 1-year lag in the reporting of Scope 3 GHG emissions where it's not possible, where an entity can't provide them in the current year. That's indefinite relief. We would expect the use of that to reduce over time. But of course, these are the types of issues that can be picked up in a PIR. Just to emphasize this point again, those are all proposals. And so that's what we sought feedback on, and we're still redeliberating that stakeholder feedback. So I've talked about some of the proposed requirements. I think it's important now to recognise some of the things that exist beyond the scope of EDS01. Your current slide identifies 4 of probably the most significant issues that stakeholders identify in this space and have particular views on, but fall outside the AASB's control. So the first is the entities required to comply with ASRS standards. The second is the legislative date for commencement for compliance with the ASRS standards. The third is the issue of legal liabilities and directors' responsibilities. Lucky last is the level and type of assurance. So these issues are addressed within the government's current policy position statement, as well as legislation, which of course is subjected to parliamentary debate. Cool. Next slide. So what do we do in terms of ED outreach? I mentioned earlier that we published it for comment in October of 2023. And considering the significant and far-reaching nature of the proposed changes, the board decided to have a 130-day comment period, which ended on the 1st of March. Immediately following the release of EDS01, we commenced education activities to engage stakeholders of forthcoming requirements. And we pretty much accepted every single engagement we're asked to do. So this was membership organisations, peak bodies, interest groups, communities of practice, public, private, NFP organisations, investor forums, and many more. I was reflecting on this a little bit the other day, and we had instances where I think quite literally within the space of days, we had a meeting with G100. We're doing a presentation to the G100, which is the CFOs of Australia's largest companies. And the next day we're speaking to farmers participating in a community of practice for agriculture. And it really kind of spoke to the breadth of where we sought to go and beyond our traditional focuses, I guess, for financial reporting. We also developed asynchronous content, so a YouTube video to engage stakeholders in new modes and inform them of the upcoming requirements. We continued these activities into parts of 2024 and then transitioned to outreach at the end of January 2024. The outreach was the largest of its kind the AASB's undertaken, and we held events throughout Australia. This meant that we were travelling pretty much all of February, and in the space of 1 month, we held 19 in-person outreach events and 3 virtual events. I think suffice to say it was extremely pressing in timing, but it was worthwhile. Really, really worthwhile as a process, and much of the stakeholder feedback we received there helped to inform our thinking and decision-making. Just a little bit of a high-level overview. At the conclusion of the outreach period, we had more than 1,000 registrations for our outreach events throughout the month. We received more than 115 formal comment letters and we received more than 280 survey responses. So a huge amount of data. We're currently working through the analysis of the stakeholder feedback, but the initial feedback indicates there are no fatal flaws that would require re-exposure, which is something that we're obviously very, very happy with. That's not to say that nothing will change, but rather there's no fatal flaws identified so far. Brilliant. Amelia, excellent. Cool. So what comes next? As I just noted, we're currently undertaking an analysis of the stakeholder feedback. The volume of feedback is challenging, but we're committed to doing it right, and that necessarily takes time. Once the analysis progresses further, we need to consider how to best address the issues identified by stakeholders so we can finalise the standards to support the proposed legislative commencement date. Those of you who are closely watching this space may have seen that the proposed legislative commencement date has moved from 1 July of this year to 1 January of next year for Group 1 entities. It's a challenging time, but we're committed to doing it right, and the feedback has identified certain things that we can improve on. But we really need to carefully reflect on these at a staff level and, of course, at a board level for the ultimate decision making. The entire process itself is, of course, dependent on the passage of legislation, and the AASB would be very cautious about issuing any final standard, and I dare say would not, until legislation has passed the House. So to round it out, everyone watch this space. That's pretty much it from our end. Thanks, Amelia.
Excellent. Thank you very much, Lachlan. So we're just gonna, I see there's a question, but I think we'll save that one to a bit further down. But yeah, so here, what am I going to talk to you about today? So I'm going to talk to you a bit about the international alignment of our standards here in New Zealand, the implications of this international alignment, particularly vis-a-vis with what's happening in Australia, and then what's next. So how are we in New Zealand at the XRB going to be responding to Australian developments? So to begin, as I'm sure the majority of you out there on this webinar are aware, practically all climate-related disclosure requirements globally are TCFD-based, Task Force on Climate-Related Financial Disclosures. So this means that that basic four-pillar structure of governance, strategy, risk management, metrics and targets is the same across nearly all mandatory reporting standards that are either in existence, like New Zealand's, or under development. And that's New Zealand, Australia, Asia, Europe, the US, you name it. But importantly, and I think, Lachlan highlighted some of these, across the standards, there are differences. And these are, many, and I will just run through a couple now. So, for example, the purpose of the standards, and that includes really, who the primary user is, so who the information is designed to reach to. And that's really important because that primary user definition means that it's only what's material to that entity's primary user that should be disclosed. And again, that depends on how each individual standard defines materiality. So different standards in different parts of the world on climate do have really different primary user definitions. The disclosure requirements themselves are different. So, for example, whether Scope 3 greenhouse gas emissions are required to be disclosed, whether resilience assessments, etc., are required. The level of detail is really different. So, for example, how much detail should an entity get into when it's describing its scenarios? Some standards require more, some standards require less. There's also quite a bit of other prescription over what other elements are required. So, for example, Lachlan talked about the NGES scheme legislation in Australia. So that is a prescribed part of the Australian reporting that, you need to do your emissions measurement in Australia in accordance with NGES. In New Zealand, for example, we don't prescribe what measurement standard you need to use. In others, they prescribe different measurement standards. There are differences around liability, so that's directors, safe harbour, etc. There's differences in the assurance, and that is in the level of assurance. Is it limited or reasonable? What content does the assurance cover? And finally, the phasing. So that's what we call in New Zealand our adoption provisions. And so that's when the disclosures are required and how long those adoption provisions last. In some standards, they are enduring, and in others, they are kind of temporary. So given all of these potential differences, what about our standards here in New Zealand, Aotearoa New Zealand climate standards. So we do have that basic 4-pillar structure, as I said before, but I would point out 2 particular things specific to our standards here in New Zealand that I think are important, particularly when thinking about that international alignment question. So firstly, New Zealand climate standards are very clearly purpose-driven. So what we mean by that is that these standards are a piece of climate policy. They're legislated by the New Zealand government and they have a very specific purpose. So the purpose is not simply transparency of information, rather the purpose of that transparency, enabled by the disclosures, leads to changes in decision making, and that then support the allocation of capital towards activities that are consistent with that transition to a low emissions, climate resilient future. We consider this a really fundamentally important part of New Zealand climate standards, which is why I emphasise it pretty much every time I talk about them. In other standards and other jurisdictions, that purpose is emphasised more or less. And then secondly, New Zealand climate standards are what we call, highly principles-based. So what this means is that, more judgment is required because there's less specificity on the exact information or the exact level of detail required to be disclosed. But, I think it's important when we're talking about that principles-based concept that, Lachlan mentioned as well, standards sit on a continuum. They're either more or less principles-based rather than being either principles-based or rules-based. We took a more principles-based approach to the development of the standards here in New Zealand because we wanted to encourage a greater degree of substantive engagement with the purpose of the disclosures rather than, box ticking. And we wanted to provide, as much as possible meaningful information to the entities. So having said that, we do consider that Aotearoa New Zealand climate standards are internationally aligned, and particularly here, we have a comparison document with the ISSB's climate standard, which, as Lachlan explained, is the basis of the Australian standard. So, in this comparison, overall, there's a strong degree of alignment in the core content, but, that line at the bottom is really important to emphasise that there is difference, and it's differences in the detail. So, for example, in IFRS S1, S2, which is the basis of the Australian standards, it does require, additional specificity in terms of the disclosures or the disclosure of additional bits of information. So in terms of how this translates to Australia, based on that comparison document and the exposure drafts of the Australian standards, we have done a rough estimate, and I cannot emphasise enough that this is a really rough estimate. So we roughly estimate that the Australian standards have approximately 50 disclosure requirements more than New Zealand standards, and that the New Zealand standards have roughly 10 disclosure requirements more than the Australian standards. And so, as you can see, mostly the differences in the strategy and metrics and targets disclosures there. And so, just to give you a bit of a flavour there on the screen, some of the additional Australian disclosure requirements are around, some quite big bits of work. So, for example, a climate resilience assessment, and for that climate resilience assessment to be conducted annually. The risk management disclosures have to talk about the opportunities disclosure process as well. Sorry, the opportunities identification process. We don't have that. We only talk about risk management processes. And then, other things around finance emissions and current financial impacts, etc. So what we've said at the XRB is that we will commit to providing a comparison between the New Zealand climate standards and the Australian climate standard within 3 months of the publication of the Australian standards. We really want that to be useful to you. So we would really appreciate feedback on what level of detail that comparison document should get into. We do have the comparison document, as I said, to the ISSB standards on our website. So, if you have any feedback on that document, we are absolutely all ears. So then, reflecting on that kind of really more principles-based nature of the standards here in New Zealand, our aim is, as it says on screen, is for the most part, we really hope that an entity should be able to use its New Zealand disclosures to meet any other disclosure requirements. So, for example, as I said before, we do not specify a lot of things. So, for example, we don't specify which measurement standard an entity can use. So, for example, if an entity wishes to comply, meet Australian reporting standards and New Zealand reporting standards, they could use NGERS and then, report for that in New Zealand, as long as that information was, meaningful for its primary users. Same as if it was reporting into, Europe or the US, it could use something different. But what I really do want to emphasize here is we at the XRB are not the ones who are going to say whether or not you are exempt from reporting in one jurisdiction because of rules in another. And that really importantly is the role of the FMA. We do speak with them regularly. We're currently providing feedback on an information sheet, as you can see there on the screen. But yeah, and I can see, and I'll get to this question now, actually. I can see a question that says, New Zealand entities listed on the ASX, but have an ASX foreign exempt listing, so are exempt from most of the ASX listing rules. Are they in or out of scope? So my answer to that is, that's not for the XRB to determine. My understanding is that the current exemptions don't apply necessarily to climate reporting, but that is absolutely something that the FMA and ASIC in Australia have in their remit to determine. It is, again, an emphasis that every single entity has to understand its own legal obligations around how it is or isn't required to report. But I will absolutely note that question, and if we can get a more definitive answer for you now, we will try and add that to the FAQs from the webinar. So on that topic of, exemptions, etc., please do engage with us, either us here at the XRB, but most definitely with the FMA. So we're really, really keen to hear your thoughts on how exemptions should work. But for the meantime, I do want to emphasise that in New Zealand, despite what's happening in Australia, Aotearoa New Zealand climate standards remain mandatory. We really wanted to provide regulatory certainty for entities here in New Zealand, and so we have said, that they will remain mandatory until we begin our post-implementation review. So what that is that's a review of the standards. Are they meeting their objectives? Are they doing, are they clear? Are they understandable? And then particularly in this case, what is happening in other jurisdictions. So we've particularly said that, one aspect of the review will be to look at other jurisdictional reporting requirements. One thing we do hear very much is that people do want this international alignment, but I hope what you have kind of heard throughout the presentation so far is that there's a lot of things to internationally align with, and there's a lot of kind of domestic level of climate policy and other policy that these standards are coming in and fitting into. So, it's much more useful for us and for the AASB, rather than hearing, we want international alignment, to say exactly what does that mean to you? Does that mean exactly the same standards as in China? Does that mean exactly the same standards as in Australia? Does that mean some kind of convergence towards something similar, but not exactly the same? And then, feeding into the our post-implementation review is our effectiveness evaluation. And if you haven't heard of that, that is our a big research project that we have commissioned the University of Otago to undertake to look at whether the climate-related disclosures framework is making a difference to decision-making. So is it achieving that kind of purpose? And that's the decision-making both of the entities themselves and of the primary users. So that's going to be a key input to us. And so if you do get a chance to respond to any of the University of Otago's surveys on the effectiveness evaluation, please do so. So that is it from me. Thank you very much for your attention so far. So I will now get to the questions. So first one, which I've already answered the one about exemptions. So yeah, promise we will get back to that a bit more. pull the questions down here. So the most popular question is for you, Justin and Lachlan, which is approximately what number of Australian companies will the disclosures impact? And I think here it would be quite interesting to kind of explain more about what you meant about sector neutral in terms of public sector, private sector, not-for-profit, etc. as well.
Okay, good question, Amelia, and thank you for the opportunity to answer that. So in broad brush terms, we're talking 3 different groups in Australia where we're talking about the entities that will mandatorily report according to Treasury's latest draft legislation. We're talking between 20 and 25,000 entities. Now, these are all Chapter 2M listed entities within Australia, and that's an important distinction because that's the reporting criteria that Treasury have put forward as the basis for mandatory climate disclosure reporting. So 25,000 in a coarse sense. When we talk sector neutral, we're talking public sector, not-for-profit, and private sector. Now, we don't have an exact quantum on what that will look like from a public sector, but one jurisdiction alone is potentially, due to reporting boundary considerations, maybe another 3,000 on top of that 20 to 25,000. Again, the first question, which Amelia answered really well, from a purely Australian perspective, if you're a Chapter 2M listed entity, you will be a mandatory reporter within Australia, subject to any exemption that ASIC may grant you. So that would be a separate process there from a purely an Australian perspective, but that would apply whether you're in New Zealand or another country domiciled entity. If you're Chapter 2M registered, mandatory reporting, given thresholds. Yep.
Excellent. Thanks, Justin. I will take the next one, the most upvoted. Good. Thank you, everyone, for using the upvotes, which is are there any foreseen intentions to extend the climate-related disclosures remit for New Zealand beyond listed entities? If so, what would be the likely timeframe? At present, our entity is caught by Australian CRD requirements, but not New Zealand. So yeah, great question. And the answer is exactly the same as in New Zealand as Lachlan explained for Australia. It is not the role of the XRB to determine who is captured by reporting. It is our role to say what the reporting is that they're captured by. So that is definitely a decision for Parliament in New Zealand to undertake. So you might know that the Climate Change Commission, when it recommended the government to look to implement climate-related disclosure legislation, they did specifically identify looking at extending it to other types of entities, specifically the large private sector and the public sector. So that is definitely an option for the government to look at. I cannot make any comment on whether or not that's likely to happen. I think the government, it would be very much whether or not that's within the current government's priorities, and in terms of the time frame about what that would look like. But I think you can really see about the number of entities caught in Australia versus New Zealand. We have fewer than 200 caught here. Australia has a significantly larger number. So yeah, just emphasize that as soon as the government decides to make a decision, we will communicate that as well. Right. Okay, we've got another question, which is about NGERs. So over to you, Lachlan, Justin. So what flexibility will the AASB offer entities who currently calculate their emissions under non-NGER methodology? For example, multinationals who primarily use ISO standards.
Really good question. So I might even just step back for a second and talk about some of the rationale driving why the decision to prioritise NGER scheme legislation was included. So, of course, that arose through feedback to ED321, too many acronyms even for me. And it's because the NGER legislation had been in place and worked in Australia for a significant period of time. We had a substantial number of entities already reporting on NGER. NGER is seen in the scientific community to be much more rigorous, sophisticated, and contextualised to Australia. So, for instance, it accounts for a particular type of brown coal that we burn in Australia that isn't necessarily used globally. And it's also domestically supported through the Clean Energy Regulator. So if you have problems with calculating the methodology, the Clean Energy Regulator has the capacity to assist. That decision, of course, the problem with that is that there are instances where we know people have been reporting under the GHG Global Protocol. We also know there are certain entities reporting under Climate Active. There are some that are using the ISO standard for measurement. There are a lot of different competing approaches out there. That is a theme of feedback that we've received, is that, of course, there is a tension between, disrupting existing practices, but also seeking to provide forms of comparability and consistency across entities. At present, the proposal is for the prioritisation of NGA, but as I noted before, it is something that we've received feedback on, and it's something that we are going to consider a little bit more. The difference and the challenge that we've got in Australia that's particularly unique is the quantity of entities captured, as Justin alluded to before. So you've got some entities that are multinationals that operate in a range of different jurisdictions, and we have entities that are only based in Australia and have 110 employees, for instance, and certain other characteristics. Finding a balance between domestic requirements and international alignment is the biggest challenge that we've got in this space. And so the prioritisation of NGA sought to assist and enable reporters, but to the extent that that's not thematically coming through the feedback, that's something that we're always happy to reconsider, of course, and take those views to the board.
Yeah, and again, the caution there is prioritisation. It's not thou shalt only use NGAs. So it is the prioritisation of that as far as is practicable. So again, need to consider it in the full scope and not just the words in isolation.
Yep.
So that's also part of it. And again, NGA from a purely Australian perspective, it is an annual process where they look at factors, etc. So again, it's a more dynamic system rather than GHG, which is once a decade.
Yeah.
And I don't mean that flippantly.
Yeah.
Oh, thank you. And this one's for you, Lachlan. Can you expand on the point made that EDSR1 has removed references to conceptual frameworks? Can you give some examples and explain rationale? Thanks. And that's from James. Hi, James.
Great, thanks. Good question, James. So the conceptual framework for financial reporting is non-mandatory and therefore not enforceable. When IFRS S1 was developed, there was obviously demand for concepts of accounting, or a conceptual framework, if you would, and conceptual elements from existing financial reporting frameworks were included into IFRS S1. So you had things like comparability, understandability, etc. that were brought into IFRS S1. We and the ISSB received feedback that including them in the disclosure requirements would render them enforceable. And one potential challenge associated with that is that they're subjected then to legal interpretation. So you could have instances where a notion like understandability, which I find quite problematic to enforce anyway, could then be interpreted through common law in a particular way in sustainability that may be inconsistent with that which occurs within financial reporting. So therefore, in order to maintain the consistency with financial reporting, the decision was made to take those references out, cross-reference back to the conceptual framework, and then obtain stakeholder feedback on whether that is the appropriate decision or not. I should say as well that, part of thinking on that was that when you're drawing on the ISSB content, of course, one of the biggest strengths of the ISSB content is that it augments financial reporting, if you will, a building block approach. And so therefore, by rendering enforceable parts of the conceptual elements, that could produce some significant junctures, and rather than enabling a synthesis, it could actually create bigger and broader problems. So the intention there, of course, was to simplify it, but we're still going through stakeholder feedback to identify whether that view is supported or whether that's a view that that others don't agree with. What I should say though is I think there's an important difference as well between people wanting to know concepts of sustainability versus having those concepts rendered enforceable. And that's the real juncture that we're at here, is that we understand there is a strong desire to have concepts for sustainability because it enables organizations to go above and beyond, to report on topics that might not be captured by the AASB, the IFRS Foundation, whoever, but rendering them enforceable and subjecting them to legal interpretation was seen to be a risky approach as a preliminary point, but we did want comment on it. So
yeah, and look, just to augment that again, conceptual frameworks are really important. We go back to accounting, we have a conceptual framework. Not for profit, we have a conceptual framework. Our work plan illustrates that we will develop a full conceptual framework for sustainability.
Yep.
And again, we're happy to partner with any and all jurisdictions on conceptual framework development. And indeed, we've offered the conceptual framework back up to the ISSB at the end point. Because again, anything that helps consistency globally, that's certainly our starting point.
Excellent, thank you. I'm just going to stop sharing my screen because I realise people don't need to see that anymore. They can just look at our beautiful faces, Lachlan and Justin. So we've got some really interesting questions coming. So I'm going to pick this one, which is Amelia and Lachlan, are you able to compare and contrast the differing approaches to Indigenous values in reporting? And also, how can we get involved with the University of Otago project? So how you can get involved with that project, email us at sustainability@XRB. There are surveys. They're doing a kind of a bit of a lag at the moment in terms of research analysis, but yeah, we can definitely put you in touch with the researchers. In terms of Indigenous values, from our perspective here at the XRB, so we made a decision for the climate reporting that because there were no Māori reporting entities captured in the direct reporting requirements, that we would include Māori values as and when possible. And what we have done is, for those of you who don't know, we have a separate project that's been going for quite some time now, over 18 months, called Ngā Pou o Te Kawa Ora, which is our project, roughly translated means the pillars that give life. And that is a project looking at creating, Justin was just talking about a conceptual framework. That's a project looking at creating a conceptual framework around intergenerational impact, sustainability reporting, very much from a deeply Te Ao Māori basis. So we're currently trialling that with some Māori reporting entities at the moment. It's a really fascinating project, and we are looking to make more information about that publicly available soon. But yeah, Lachlan, do you have any thoughts on that question?
From us. So one of the challenges that we've had in the space, and I know organisations have also had it, is the breakneck speed in which we're progressing. So just to put it in a timeline, ISSB standards were issued in June. We had our exposure draft out by October, and we had an originally proposed legislative date of 1 July 2024. Compare and contrast that with standards that, for instance, the AASB has been involved in insurance, which I heard from a senior partner the other day that they were involved in the project when they were a graduate at the AASB that's recently been issued as an IFRS standard, which I thought was a nice throw through. So it is breakneck speeds that we're moving at here. That's necessitated putting certain parameters on the project and ignoring certain issues that we know are important. We know that this is a thematic issue that comes through, but given some of the time constraints that we've been put under, it's had to be, other matters have had to be prioritised in the short term. And so, again, this is speaking from a personal capacity. I would imagine this being the type of issue that would come through at more of a conceptual framework level, if you will, and consideration, which is something that we know we're going to look at in the future. But right now, the work is focused on getting climate-related financial disclosures out.
Yeah, and again, just to not want to understate or overstate the fact, maybe reporting's not the end goal in this, it's behaviour change. And when we look at what the XRB has achieved and talking about the impact of reporting and the generational change, it's something that the AASB is keenly looking at to understand how that works, how to incorporate that. So it is part of the future plan. But as Lachlan has said, at the moment, we need to get a standard up so we can start the process, but very much it is part of that longer term vision.
Yeah, and this isn't meant as a deferral of indefinite work as well. This is actually an area I'm extremely passionate about. I published in that area, and the idea of having an accounting by another, I think, is a really important perspective to include. And I think it's actually a beautiful part of the reporting process. And as Justin noted, it's not an exercise in bureaucracy. It is an attempt to actually create a more holistic approach towards accountability. And so, yeah, but for the breakneck speeds we're moving at, we would love to prioritize that, non-mandatory guidance, education material, etc. All of those things all at once.
Lovely segue into the next question, which is which supporting guidance does the AASB anticipate providing to Australian disclosures, and when? And I'm just going to read the second part out of this because this is so nice. In my humble opinion, the XRB/FMA guidance here has been world-class and a huge boost to consistency and quality in upcoming disclosures. So Sam McLennan, you are welcome back at any of my webinars anytime. Please ask more questions.
Great question. I assumed it was going to be from an anonymous attendee, and I thought it might have been you popping it in there, Amelia, with the segue. We made the decision to defer any non-mandatory guidance until after the issuing of the standard because of the time frame that was being imposed on us. We had to put EDSR1 out for, we released it in October. We only finished consultation on the 1st of March. If I was to say what's the most common theme that we've heard throughout outreach, it's education and non-mandatory guidance. Scenario analysis is a perfect example of where people are very, very keen for non-mandatory guidance. What we've sought to do is defer the non-mandatory guidance until after the issuing of the standard, but use the feedback from EDSR1 to identify specific areas for developing non-mandatory guidance. And so materiality, climate scenario analysis, potential applications within certain types of entities are probably the top three.
And even the more thematic, the difference between qualitative and quantitative information. There's a lot of language barriers to cross between financial reporting, sustainability reporting, team members. So that is something that we are now building our capacity for, to accelerate where we thought we would be.
Yes.
But to start that process sooner rather than later. So yes, I absolutely agree. We've got agreements in place with the ISSB, the IFRS trustees, again, to look at their guidance materials. We will happily borrow anything we can from the XRB. So gratefully accepted. Thank you, Amelia. The broader this can be, the simpler it can be, the better it can be. We certainly enjoy the XRB materials now because the branding is excellent. The tone and the messaging has been consistent across time, which aids the readability. So again, these are all things that we've been able to sit back, watch and observe and learn from. So in many ways, the XRB has sort of set the path for us, which is terrific, on how to do outreach. And this is another example of that. So more of this is coming to the AASB.
And we have a very specific question building on this around scenario analysis. So James Hughes, hi James, says, regarding quantitative scenario planning as opposed to more qualitative and narrative based in New Zealand, there has been debate on A, what this actually entails, B, challenges of doing this, and I think C, will there be specific guidance on what processes to follow or reference scenario inputs to include? Thanks. So yeah, I definitely echo James's question. Scenario analysis has been something people have a lot of questions about, exactly as you say, Justin, because it's a new area with different terminology that different people across entities are having to grapple with.
Yeah, and just to confirm as well, the ASRS standards at present propose that an entity can use qualitative or quantitative scenario analysis depending on their unique circumstances. And that goes back to the number of entities that are captured by virtue of the reporting regime. We understand that quantitative scenario analysis is a much more sophisticated and challenging exercise for entities. And of course, it's an expensive exercise and there's a knowledge gap, a range of different issues in that space. It's absolutely an area that we're looking at developing, without producing the board's decision. It's a theme that has come through quite strongly in our stakeholder outreach, that it is a new area and anything we can do to assist application in that space would be appreciated. So if I was looking at the crystal ball, I imagine that might be an exercise where we partner with experts in order to produce guidance that makes it, it is funny though, right? And this is a little bit me going off piste here, so you'll have to excuse me. The best part of webinars, right, is that you want to make it simpler, but you don't want to make it simple in the space, because it is necessarily technical as an exercise, because it necessitates a reflection on the entity's circumstances and a very contextualized approach. And one of the things, kind of like scope 3 measurements, if you will, the output itself is one thing, but I often see the output as like an NPV from an investment decision, right? It's subject to manipulation. It's really about what goes into it. That's the real key takeaway. And the process of doing scenario analysis is of utmost importance rather than the output itself per se. Now, of course, we want disclosure of the assumptions and inputs that go into that. However, what we really want is organizations to go through and look at where their exposure to climate-related risks obviously are and how opportunities may segue and pivot from that as well. So whether you've got physical assets located in low-lying areas that may be subjected to rising sea levels and the like.
Yeah, look, I completely agree. It is around the assumptions, and that's probably the most important part of the resilience assessment, the scenarios. It is the stress test, and that's what we're interested in. It's the stress test. It's also fair to say when we're thinking about this, again, this is my personal opinion, where we think about industry best practice being developed, and we can think of an industry-wide scenario being developed, certain industries, and potentially thinking about food production industries where water scarcity is going to be an issue for them. It already is in certain areas within Australia, become a more increasing in salinity coming into the water table. There's going to be an industry specific one there. You can see it, it stands out, and then they can collaborate, share the learnings of how to do the assessment, and then also effectively benchmark themselves against each other to look for peer support. We could see that happening relatively easy. And again, thinking of the education process, that may be a natural pivot point where we end up through education as industry groups developing themselves their own scenarios. Again, we're at the very early stage, and it's quite exciting. But again, we just need to maintain focus and actually get the standard first before we get too excited about the education that's coming.
Thank you. All right, the next question is getting back to NGERS. So I think you kind of answered this, but we'll just clarify. How would you suggest an entity operating on both sides of the ditch deal with the difference in GHG metric methodology between Australia and New Zealand when preparing a group report, Australia being NGERS methodology? Can the entity elect to prepare its Australian reporting following ISO methodology? So I think just clarifying your point, Justin, about
the hierarchical approach.
Yeah.
So I think that's where we would start, and it's one that if we were advising, and clearly we're not, and it's our personal opinion, and that's the limitation on this, it's clearly a conversation that you're going to have with your assurance practitioner, whether it meets the reporting requirements in both countries. When we've heard reporting requirements from Europe, so I'm going to take this away from being Australia and New Zealand, and they talk around compliance with ESRS, would also give you compliance with ISSB. Again, that analysis needs to be undertaken to understand the differences, but theoretically and conceptually, if you've got a valid measurement criteria and you can make that argument with your assurance provider that it meets and qualifies for the Australian requirements, then that seems a reasonable statement.
Yeah. And, part of it as well is like if you're required by another jurisdiction to employ a particular GHG measurement methodology, that gets you a significant way of the impractical argument, if you will, because it's necessary to use it. And if you've got systems in place and you've got particular ways of doing it, reinventing the wheel just for a particular reporting requirement, as part of an agency relationship in conversation with the assurance provider, I would see as going part way to addressing that issue.
I think we've got 1 minute, so we're just going to sneak in one last question from Tama, who's been waiting really patiently there. For prudentially regulated entities in Australia, how is this work being considered alongside APRA's climate guidance?
Very good question. Very good question. We obviously sought to have a close relationship with APRA throughout the entirety of the process. Much of that was on the development side. When the exposure draft was issued, we pretty much went into full education and outreach mode up until 1 March, and pretty much then we've been in stakeholder analysis mode. Consequently, that's meant that we've been largely focused on that process. We obviously can't control what other entities do and whether they produce certain guidance or otherwise. But do you have any other?
Yeah, look, I think it's fair to say that we don't work exclusively with one regulator.
Yeah.
And it's very easy for people to see ASIC regulated entities Australia, the Chapter 2M, that's our company registration type for mandatory reporting, as the only regulator. We've got Clean Energy regulator that we're working alongside. Treasury is a regulator in its own right. Department of Finance at a Commonwealth scale is a regulator in its own right. And then we have APRA, we have ACNC, all of which we have regular dialogue with, understanding where they're going, what success looks like from an enforcement outcome perspective, how we're going to holistically share the education load, where we all fit in together within the ecosystem, because again, a standard without enforceability and assurance is not a standard. So again, trying to understand that now is part of our process, so we have a consistent tone and methodology when we start our guidance and education process. And I mean on our next guidance and education process, because we're at the start of that journey. So this is a watch the space, more to come. And yes, we will be close with APRA and Clean Energy Regulator and ASIC and ASX and others, because they've all got a role to play in this to make it seamless and easier. I'll resist the word simple.
Yep.
Easier to actually implement and be meaningful to affect behaviour change, because that's ultimately what we're talking about, not just reporting for reporting's sake.
I think that is a fabulous line to end on. Thank you so much, Justin and Lachlan, for your time. Thank you everyone out there for watching. We really hope that was useful. Please get in touch with us if you have any further questions, and we will aim to get these slides and the recording up as soon as possible. So thank you very much. Ka kite anō.